Welcome to hour 2 of The Truth with Sherwin Hughes. And yes, we are playing love theme music today, because why wouldn't I? Because I love everybody and I love what I do and I love a great deal of you. Can't say I love all of you, but enough of you. You know what else I love? I love talking about money and banking and financing and, of course, the importance of credit. And in studio, we have Jessica Noth, who is the regional manager of Community Reinvestment Outreach for BMO. And also she's joined by Mr. Brandon White, who's the Small Business Officer and previous branch manager for BMO. Welcome to you both, and happy Valentine's Day to you both.
Thanks, Sherwin. Happy Valentine's Day.
Thanks so much. Happy Valentine's Day.
Thank you guys both. Let's talk about something that is very lovely and very important. It is credit and the importance of credit. Now, you have some confusion, I'm assuming, with credit, so I want to start with something people may be confused with. You have a credit score, you've got FICO scores, right? These are not necessarily the same thing. Is that correct?
Yes, Sherwin, that is correct. So there's going to be three, reporting credit bureaus: TransUnion, Equifax, and Experian. And the FICO score is, we'll say, a combination of them. Typically, it's when we look at all three of them, they're going to eliminate the highest, lowest, and the FICO is typically the middle score.
So if I'm seeking a home loan, an auto loan, and I want to get the best interest rate, what scores are lending institutions prioritizing?
Do you want to jump on that, Jessica, and then I'll hop in?
Sure. So for home ownership, and one thing I just want to quick point out is that your credit history is not your credit future. So some of you may know your credit score and you might think it's not excellent, but you can really work on your credit score. And those are a couple things we want to tell you about today. But credit is really important because it enters into many things. And one of the large things that it enters into is a house. So you can go as low as a 540 for purchasing a house, but if you are not in a big rush and you can get your credit score up a little bit, we recommend getting up to 640 because that's going to qualify you potentially for a lot of other programs. And then even if you start getting up towards 700, it's great because your interest rates start dropping. So if you got to get out of that apartment and get a house, you can get a house potentially at a 540 if everything else is great in your financial portfolio. But we do encourage even increasing your credit score.
Let's give some context to those numbers, because someone who may be unfamiliar with how credit is scored, 540 may not mean much to them. What is the lowest credit score, and then what is the maximum?
So the lowest credit score is in the 300s typically. The highest is 850. So even though, 580 is technically considered poor to fair, but you still can get a house with it. So the things that go into your credit score is how you pay your bills. Do you pay them on time and as agreed? What your credit utilization is. And I'm going to let Brandon speak deeper into that later. How much debt you carry, how often you open a new credit line. For example, if you go to Kohl's and they say, hey, do you want to get 10% off if you open this Kohl's card? That's going to be a ding on your credit. So that, and then your credit history, the length of your credit history goes into how they look at your credit score.
How can an individual consumer look at their credit history? Because if they're able to look at it, they may see some things that are inaccurate, some things that they paid off some time ago, but it's still on their credit report. How do you recommend people go and look at their own credit reports and scores?
So everyone does have the ability to pull their credit report for free through annual credit report. So that's definitely one I recommend. I know a lot of folks I work with on the personal and business side. Oftentimes I'll hear about, Credit Karma and some of these other, I'll call them third-party sources. And I say you want to go straight to the horse's mouth, right? You want to go to either the TransUnion, Equifax, Experian, or go right on annual free credit report and pull your credit report.
So is Credit Karma, I know that's a popular website or app that people use. Is it inaccurate? Is it not recommended? Your thoughts on that? Because I know it's very popular with many people.
So Credit Karma, I think, is a good tool. It's not completely accurate. You are much better going to annualcreditreport.com. That's not going to give you your score unless sometimes you pay extra with the bureaus. So Credit Karma is a great tool to kind of keep track if your score is going up or down. It's not necessarily always going to have the most accurate number. There are a lot of financial institutions that also have products. I'm going to pivot to Brandon to talk about our Credit View.
Yeah, so we have a phenomenal product within our online banking called Credit View. What CreditView does, so not only does it allow you to kind of see an overview of your credit report, so, your outstanding debt that you have, total amount, credit card, home, auto, anything you have out there, but then it also, the cool features we have within it, it allows you to simulate, right? So let's say you have a large outstanding credit card balance, you can actually simulate if you pay it down to a certain amount, roughly what that's going to reflect on your credit score. So it's pretty cool. It kind of allows you to play around and be like, okay, so if I actually decide to pay that down or to take care of that, here's kind of roughly what I'm looking like the impact's going to be on my credit score. So that's some pretty cool features that we have within there. And again, it allows you to just have a look over at your credit report, and you might see, to your point, some things on there that you paid that shouldn't be, allows you to reach out to those folks to hopefully get that off your report. But also to your point, when you pull the free credit report, you're able to dispute. So I know you kind of mentioned that. You might see stuff on there that shouldn't be on there, that wasn't me, or that's been taken care of. You can dispute it right through there. So that's a beautiful thing about when you do pull that credit report, is being able to dispute those items.
And if someone has, let's say, a credit score lower than 540 and they're trying to at least meet that threshold, and they do have some inaccuracies, some errors on their credit report, a dispute that's resolved could potentially result in a higher score. Does that sound accurate?
Yes. And so one thing, and if I said 540, apologies, guys, the lowest is 580 that you want to be at for home purchase. But so let's say you pull your credit history report. The reason you want to do that is because your credit score only shows you a snapshot. Your credit history report shows you why your score is that. So if you see something on there that's not correct, you can dispute it. Why pay somebody else $130 to dispute that for you when you can dispute it on your own? Put that $130 towards paying down debt. Both of those things will help increase your score. One, you're disputing the thing that's not correct. Two, you're using those funds to pay down debt that's dragging your credit down.
I do want to give folks some pointers on how they can build and maintain credit, but people also should know that your credit score can be tied to lower car insurance premiums, and there are some employers that will check your credit score. I've always disagreed with that because someone's credit score does not mean that they're not a good worker or a hard worker, but you all need to know that an employer can actually check your credit and make a hiring determination based on that. So it's more than just, the ability to get a loan at a low interest rate, getting a mortgage. It also can have some impact on your employment. So Brandon, Jessica, some pointers on how to build and maintain that 850 credit score.
Jessica, I'll let you start.
Okay, so mentioned one thing before, just paying your bills on time. We mentioned that already. Also dealing with debt. So sometimes I've talked to people who are interested in purchasing a home. They have an okay credit score maybe, but they have like $10,000 in the bank and they are still holding debt on several lines of credit. Why, I'm not sure. Maybe they don't realize it's due, but paying down that debt helps in a few ways. It gets your full amount that you owe down, but then it also decreases your credit utilization rate. So that's a really important part. Brandon's going to talk more about credit utilization with our credit building products, but dealing with that debt, paying bills on time and as agreed is the most important. You can open a line of credit with somebody else that has really good credit, but be cautious on that because if all of a sudden their credit starts taking a nosedive, so will yours.
Credit utilization. Give us some info on that, Brandon.
Yeah, so I always say rule of thumb is you kind of want to be around that 30% mark or lower. You really don't want to go over that of utilization. So let's just say for simple math, you have $1,000 worth of available credit. Let's just say on a credit card, you really don't want to go over or much over that $300 mark. So you want to stay about that 30% or below. And that's really going to help keep your credit score higher as your utilization goes up and up and up, and the available credit line is tightening and tightening up a bit. You're going to see that impact your credit score, 100%.
So I have a little anecdotal story here. I always was, under the mode of thinking that keep your credit cards paid off or as close to paid off as possible. And so I got a number of credit cards. Most of them I do not use. And so what I found, because I want to have a lot of available credit, just in case. Well, one of my credit cards, they sent me a letter. We're going to reduce the amount of credit that you have available because you're not using this card. So do you suggest making maybe smaller, frequent purchases and then paying that off right away? Because carrying a zero balance can impact you negatively as well, right?
100%. 100%. It is very important to use the credit, right? So another component that's going to affect your credit score is when they get closed out, right? It can have a great impact on your overall credit score when a credit card is closed out, when a loan or a line of credit gets closed out, right? And so that's where many times we do talk to folks about making sure they're using it, paying it down before they get hit with that interest. And then many times, what you can see is the flip side, where they start offering to increase your line of credit, which now, again, is helping that availability and utilization percentage when they just automatically increase it for you. And that can come from just paying bills on time and taking care of the responsibilities you've committed to.
If people want more information about BMO Bank and your products and services, including your credit building products, where do you suggest they go?
So I would say 100% you can start right here with me, Brandon White. More than happy to share my info as well. I don't know the best way to kind of do that, but you can always reach me at 414-882-1203 or Brandon, C as in cat, .white@bmo.com. That's another way. We'd love to help you out. We have a couple really good products. One, definitely if you've had some credit issues in the past and you're really looking to build credit or establish credit, we have Secure Credit Card. We also have a Secure Credit Builder. And those actually are also products that we utilize to really help folks start towards like a down payment on a home and utilize in other ways too. Jessica, I don't know if you want to add anything there.
Yeah, those are two excellent products, especially with a credit builder loan, because it diversifies your credit and it's like glorified savings. So at the end of utilizing the credit builder loan, boom, you have $1,500 to $5,000 in savings and your credit score is significantly increased. That, along with the Secure Credit Card, is a great way to go, and Brandon can help you with both of those.
Jessica Noth, Regional Manager for BMO Bank, and Mr. Brandon White, Small Business Officer also with BMO. Thank you so much, and I love the fact that you were both here on Valentine's Day. We appreciate you sharing the information with the audience.
Thanks, Sherwin.
Thanks, Sherwin. Much love.
All right. The Truth with Sherwin Hughes on 101.7 FM. We'll be right back.
The Truth with Sherwin Hughes returns after this on 101.7 The Truth app, and 1017thetruth.com.